Hello everyone and welcome to today's morning report on Tuesday the 26th of January with me, Rich Perry, market analyst at Antec Markets. We've had another disappointing open on the European trading session, and that's come as this oil price has just plummeted away again. Yesterday we had a huge retracement of the move that we saw on Friday, and then that subsequently has followed on today. Let me just show you. That's the dollar. That's oil. Big retracement of that Friday rally, and it's sort of continued lower again today. The output for Iraq was reportedly at record levels, and also it signs that Saudi Arabia are also continuing their investment in oil as well. So it's basically just another excuse for the traders to get on the back of this oil price decline, and it's falling away, and it's certainly having an impact on sentiment. General sentiment has been driven by the oil price in recent weeks, and that continues to be the case. The sharp declines on Wall Street overnight that continued into the Asian session, 2.5% on the Nikkei down, and we've seen European markets open sort of around about 1.5% lower, and it doesn't look all that great for the continued decline on these markets, which seems to be that the rallies continue to fall over at lower levels. And once again, the short covering rally that we've seen in these markets has just completely utterly been petered out, and it looks to be reversing now. So we're seeing safe haven trading again back in the markets. We're seeing these treasury yields lower. This is the 10-year, lower on the 10-year. We're seeing the 2-year again sharply down today, and that sort of reflects the mood that we're having at the moment. And it's got some key moves on gold, got some key moves on the yen again, and yeah, it just continues to be that safe haven flows are back in vogue once more. So, what have we got to look forward to today? Well, there's a little bit of data this afternoon from the US side that may well look to impact on sentiment. Starting off with the 2 o'clock house prices index from Case-Shiller, and that's expected to show growth of 5.7, so continued improvement actually in the home prices growth, house prices growth in US. And then at 3 o'clock we've got the consumer confidence expected to be again 96.5, so no real change from last month. But what I think could well be the interesting bit of data today is the Richmond Fed Manufacturing Index. Now, yesterday, this is the Dallas Fed. We had the Dallas Fed Manufacturing Index expected to be at minus 14. Actually came in at a massive multi-year low at minus 34.6 yesterday, and that just continues this sort of trend that we've had of disappointments. Now, Richmond is probably one of the very few areas. Federal areas in the states that has positive growth at the moment on its sort of manufacturing index. 6 was the reading last month. 3 is the expected reading this month, and if it goes negative, I think that would be again just another instance of just declining signal of declining manufacturing sector in the states, and that isn't great for the prospects of growth generally. So I'd watch out for that Richmond Fed at 3 o'clock today. +3 is the expectation there. So my chart of the day is the dollar Swissy, and dollar Swissy has been in this big uptrend channel for a while actually. Let me just get rid of the crosshair, zoom out. We can see this uptrend channel that we've been in for sort of 9 months or so, and it continues to pull higher, and it's actually got a sharper uptrend now in place since the August low. Zooming back in, you can see this sharp uptrend that's actually being flanked by this 89-hour moving average. 89-day moving average now, which is also sort of helping to pull the dollar Swissy higher. You've got the momentum indicators which are positively configured. You've got the RSI which continues to confirm the recent spate of higher lows in place since sort of mid-December, and we actually had a breakout on Friday last week above the 101.25 level, so that sort of reopens these highs again. 103.30. and it certainly looks like little corrections intraday or even daily are being bought into now, and I would use this sort of any sort of weakness that you get on this dollar Swissy as a chance to buy. Now on the hourly chart, you can see that there is a sort of a support band which I've put in here, 10050 to 10080, which seems to be in place, and even then you could argue that there is a support coming in around 10110 area, which is interesting. Even that is looking to hold up. So there is sort of a line of sort of breakout support levels that is sort of being used as a basis of support, I think, which will be bought into. The momentum is pretty positive. That RSI has just turned up from 40 on the hourly. That's a positive. The MACD lines are looking to sort of bottom out around neutral again. So I'd be using anything around that sort of looking for buy signals really. Again, that 101.10 mark is a line of support which is held today, but beyond that 100.80 and 100.50, I think until you see the 99.85 level broken, I think that is just a continuation of this sort of sequence of high lows and a continuation of this sort of buying into dips strategy that you have on dollar Swissy, that I think is going to continue to pull it higher. Now the overhead resistance levels is yesterday's high at 101.70, but then beyond that 102.25, which is a sort of a late November sort of pivot line. 101, 102.25, but then above that 103.30 is sort of that key high from November. So I think that what we are going to do ultimately is test that 103.30 as this sort of big uptrend channel continues, and using little intraday and corrections as a chance to buy. So I wish you good luck in your trading today, and I'll speak to you later, I think.